just heard from Amazon. We are going to hear from Apple later today on earnings. Big tech earnings continue all week. My next guest says large cap tech is undervalued at this time. Let's get more from Mary Hagerman, Senior Portfolio Manager and Investment Advisor at Raymond James. Thanks for joining us today.
Great to be here.
So big tech, of course, a big focus for this week. Amazon just came in. It is trading down after hours. It beat estimates, but the guidance, of course, is what investors are not really enjoying right now. They are affected, of course, by the trade war and what's coming out of China. We had Meta and Microsoft report. They were higher. With sort of this mixed picture we're getting, would you buy into large caps today? Oh, tech caps, excuse me.
Yes, I would. And actually, I did double down when they hit the bottom a few weeks ago, what we think was the bottom, but we're still not sure. Listen, I like tech. I think tech will go on to dominate in the, in the sector space. But we came off of two great years in 2003, 2004. We got into 2025 and the tech space was considered very overvalued. The market was ripe for a pullback. So we got one. And I think we're going to slowly see a turnaround with more and more positive news.
Okay, so one tech stock that did also beat estimates yesterday, but dropped today is Qualcomm. What do you think has happened with Qualcomm specifically? And I guess what we're saying is this is not a grand revival for all tech across the board.
Yeah, I don't get too bogged down by specific stocks. That the tech space has been dominated by the Magnificent Seven. I buy my tech in the State Street Tech ETF called XLK. So you obviously have the bigger names in that ETF, but you have other names as well. And I'm just looking at the sector as a whole. I don't want to have all my tech in the Magnificent Seven for sure. And I think Tesla, we could sort of extract from that basket for the time being. But I mean, I just continue to like the sector as a whole and like to have diversified exposure to the sector through an ETF like XLK.
Got it. Okay. Pharma major Eli Lilly losing today despite beating earnings estimates. Some companies are, of course, getting rid of guidance or lowering their guidance or trying to provide scenario-based guidance. Do you think we're going to get just a complete different mix of this as we move on because of the trade war?
I think the trade war is going to make it very difficult to see clearly what's going on and who's going to get affected longer term. What we've seen with the step back from the tariffs and the 90-day kind of holding or negotiating period is more of a return to what could be considered a new normal. So we are giving the market a chance to regain its footing. We're going to get clarifications when this 90-day period is going to be over. Hopefully, not too much damage has been done to the U.S. economy. And if that's the case, I think we should see the U.S. market positive by year end.
Do you think then the trade war has worked its way through the market at this point as it stands?
No, for sure not. I still think that nobody knows what is truly going through Donald Trump's mind. But I think he's had people talk back to him, and especially when the bond market was talking more aggressively than anyone else, if you like. I mean, it's been obvious that his economic platform hasn't turned out the way he thought it would. He's taken a step back. He doesn't want to be responsible, even though he said he doesn't care about the stock market. He doesn't want to be responsible for a bear market causing a recession. And he's got midterms to think about. So I think we're going to see some better economic policies being pushed through that will support the market without necessarily getting rid of tariffs. I think we expected tariffs with Trump's arrival. We'll definitely get tariffs, but maybe not as bad as we once thought they were a couple of weeks ago.
Are you hopeful that the China tariff situation will be unwound?
I don't think that anything is going to be unwound. I think things are going to be reevaluated. I mean, China is obviously the big player in this whole tariff situation. And that's kind of why I think Trump sort of left that to the end, said, okay, I'm going to put everybody else on hold, but I'm really going to concentrate on what happens with China. But we all know that those negotiations are probably the most important in everything that's going on, and he will attack them carefully. I'm not saying he's going to unwind things, but I don't think he'll stick with the tariffs he initially said he would put on China.
With the run-up in gold and then sort of the fallback now after things have evened out, I'm just wondering what you're doing with gold in your portfolio.
I'm keeping it, and it's actually a position I'm not rebalancing to sell off. I'm actually adding to it because I really think that this tariff caused chaos that we're seeing in the markets is starting to calm down, but it's not going to go away. And we've just had, of course, a whole new political situation here in Canada where we still don't know how Canada is going to fare through these upcoming negotiations with the tariffs and what's going to come down the political pipeline here in Canada. So I think it's best to have a portion of your portfolio defensive. Gold really does a good job with that.
Okay, we do have to leave it there. Mary, appreciate you joining us on the program. Thanks for sharing some of your time today.
Thank you.